If you are watching SPY break all-time highs and wondering what is going on and what comes next for SPY, this might be the right video for you. I already made a video a few days ago walking you through the last 4 midterm years and explaining you how 2026 is a lot more predictable than we think, and we are actually on track to doing exactly what we have done in the past. In today's video, I'm going to create a theory of why I think that the market might top off in September and bottom off around October timeframe, but this doesn't have to be true. And there is no guarantee that this will work out exactly how I'm predicting it, but the only thing you need to understand is that we are expecting a drawdown, and when that time comes, you should have enough cash to go long on some good quality growth stocks that you truly believe in. Because when the market pulls back 10 to 20%, it brings down all the stocks with it, and even the best of the best stocks come down along with the market indices. Now, I don't look for those 10-15% trades and go in and out of markets all the time, but I do look for these windows of huge opportunity where the stocks are skewed to the upside and the risk is very minimum. And if you are tired of going in and out of market trying to make 10-15% and losing money along with it, you can sign up for the waitlist in the comments in the description below. I'm putting together a community for like-minded individuals who are looking to keep the quality of their life, reduce stress, and only invest 2 to 3 times a year, looking for 50 to 100% winners. So with that being said, let's zoom out here and let's talk about the last 4 midterm cycles. Now, as I mentioned, my theory is that we top out around September and bottom off around October time. And where is that coming from? If we zoom in to the 2010 midterm year, you can see that we saw weakness in the start of the year. We came back up, broke the new all-time highs in about April timeframe. We came down and bottomed off around July and then continued higher for the rest of the year. Now, this just shows me that the year starts with weakness, we break another all-time high and then come down and sweep the previous low and continue higher. And that is the structure I am starting my theory with. But the timing of September highs and October lows is because of the next 3 midterm years. And of course, there's no guarantee, but it would be a great idea to go through them, right? So notice how we had weakness in 2014 early in the year, came back up, and we topped off right around September timeframe, and then we flushed low. Now, in this case scenario, we didn't sweep the previous low, but we came pretty darn close to it, and that was October as well. Let's zoom out again. Let's go to the next 2 midterm years. We saw weakness early in the year in 2018 as well. We broke all-time highs in September. We came down in October, but in this case scenario, we came even lower in December and then swept the previous lows and continued higher and broke all-time highs next year. And this is also where your intuition and expertise as a trader or investors have to come in play, because there's no way to know if this was the bottom in October, because we did sweep that later in December and went lower. And this also shows you that you should be ready and prepared for any particular case scenario. We tapped into the 200 weekly moving average and continued higher for the rest of the 2019 and went towards the all-time highs. Next time we had the midterm year was 2022. After the entire COVID run up, we saw weakness early in the year. Now, in this case scenario, we didn't break all-time highs, but in August, we did print a lower high, which is only 1 month before September, and then we flushed lower, and October was the time where we found the bottom. We tapped into the 200 weekly moving average and then bounced and of course broke all-time highs again the next year. Actually, in 2023 we came close, but then we broke the all-time highs in 2024. So what I'm trying to show you is a pattern where we see weakness early in the year when it's a midterm year. We break all-time highs somewhere in middle of the year, and in August, September is when we start forming a top. We start our drawdown, and most likely we sweep the early year weakness and then bounce off somewhere around here in October, November, or December timeframe. So even though there's no guarantee that we will come down all the way below 630, there is still a lot of evidence that we see weakness in Q4 of 2026. And that is my entire theory. That is my entire thesis. on how to invest in 2026, the later half of 2026, because if you can get this particular window right, you will end up making a lot of money in the next 6 to 12 months, because I've shown you the evidence that we do break all-time highs after that. I'm not a bear. I'm not saying that we're going into this bear market or we're seeing this bubble, AI bubble crash or anything like that. I'm just showing you historical evidence, and that evidence shows you that the base case scenario is that we see weakness in Q4. So I hope you found value in this video. If you are max long and you have no cash sitting in the sidelines, maybe this video helps you develop a new plan. As much as I'm enjoying all my ETFs go green, break new all-time highs, I am fully prepared to take advantage of any type of pullback I see in the indices. So with that being said, I hope you found value in this video. Please leave a like, subscribe to the channel, and I'll catch you on the next one. Thank you so much for watching.